evening, ladies and gentlemen, and welcome to the India Development Debate. I'm Nayantara Rai. Our big story today, and the question we're asking tonight is, are we finally in the era of the savvy retail investor? Why are we asking this question? Because look at the kind of data that has been coming out. The CDSL, which is the second largest depository that you have after the NDSL, has said now it has 4 crore demat accounts. According to the mutual fund industry and data released by the umbrella organization AMFI, it is also showing a big uptick when it comes to SIPs. A record number, in fact, being reached when it comes to investments via the SIP route in the first quarter of this year. We're going to be talking tonight to someone who has also been involved in the financialization of the asset classes, making the financial markets easier to understand, attracting first-time investors. I'm being joined live now by Nithin Kamath of Zerodha. Nithin, a pleasure talking to you. Thanks so much for joining us tonight on the India Development Debate. There used to be a time when people would say, when the retail investors join the party, it means the sell-off is coming. But that really hasn't been the case this time. What you're also seeing is the base get bigger of the retail investors. Do you think we are finally in that era where the retail investor is savvy and is also going to enjoy the bull run party?
Thanks, Nayantara, firstly for having me on this. I don't know. I mean, I think that is stretching it too far to say, to say that all the retail investors are savvy and they're going to participate in this. But I still remember last April, May, when we had the first big rush in retail investors. I had gone out there and said, stuff like, what, the people are jumping and maybe this bounce will not last too long. And we've been proved wrong. I think over the last 1 year, everyone has made money. So, like a lot of retail investors have made money. So, but I think it's stretching too far to say that, that everyone's savvy. I don't know. I think it's more about right place, right time than suddenly everyone getting savvy with their investing skills.
Of course, and you have to learn also. You have to. It doesn't come to you from day one, right? I take that point, Nithin. But what has also been different since the pandemic? Maybe because people just have more access to information, they have more access to apps and all of that, and the bull market, of course, doesn't hurt. People being locked up, trying to figure out how to grow their money. And when that has happened, you would have amazing data on that front. The new entrants, are there more women? Are there younger people? Are they coming from the smaller towns?
Right. Yeah. No, I mean, it's the same. In terms of men to women, the percentages are the same. I think it's between 17 to 20% women. But the problem with a lot of these women accounts is it's very tough to know how many of them are actually operated by women because in India, a lot of families have women accounts being managed by either husband or the brother or the father. So that hasn't really changed in terms of pre-COVID to post-COVID. In terms of age, definitely it's gotten lower because it's a lot more of the 20 to 30-year-old who's opening an account right now. So a lot more 20 to 30-year-old folks who are opening an account. So the average age of the audience is reduced. There is a tick up in terms of client addition from tier 2 and tier 3. But, that data is a little skewed normally, even from the past for us, because, like a lot of these 20 to 30-year-old, the crowd really moves from tier 2, tier 3 to the larger cities for jobs, but they don't really change their address proof. So while, if you were to, look at your customer base by address proof, it might end up showing as tier 2, tier 3. But, if we were to track users based on the IP address, essentially from where they're logging in and trading, it's still very, majority the top 15, 20 cities of the country.
Okay. And if I were to just look at that, you pointed out this point that, you don't know what they do, if it's actually the woman or it's, they're shifting houses and all of that. But if you were to just look at the trajectory also of the demat accounts, which have been opened in FY And it has been going up a lot in the recent times. But would you say most of these investors, if I were to juxtapose it with the AMFI data also that has come out, is that tryst and the journey with the markets beginning with SIPs?
This last year, there have been a lot of first-time investors. I think almost 55% to 60% of customers who are opening accounts with us are first time to the market, which means they've never done a mutual fund investment as well. Because we are typically doing, when you do a KYC for a customer, you get to know if he's already been KYC'd before or not. So almost 60% of our customers are first time to markets. And I think it's really the bull run which is getting people in directly into stocks. But otherwise you'd assume that usually the first step is to go to mutual funds and then to equities, but it doesn't really always work that way. Because historically for us as well, 50% of our customers have always been, we're the first time to do KYC for them. I think India is a in terms of we need to think in terms of large numbers. While the absolute number of demat accounts or it says 6 crore, but I think I'd bet. I mean, I can't really bet, but I'd say maybe around 2 crore. Maybe unique, and 2.5 crore out of them would be unique demat accounts, and maybe half of that would be active demat accounts. So if you look at India as an audience, and in terms of number of people, 1.5 crore, 2 crore, there's still a large potential to grow that market. We have 5 crore Indians who file income tax returns. You could maybe add another 2 or 3 crore Indians to it. So potentially the market is at least 8-9 crores in size. In terms of target market. Folks who have money to invest in the markets. So,
then of course, it helps.
Yeah, but like coming back to your question, I don't think.
What I wanted to ask you was that, of course, the bull market helps, and what you were pointing out as far as unique and non-unique and all of that. Something else that must have helped is the fixed deposit rates, because that has always been seen as the safest way that Indians like to save, how they like to keep their money. But with the way fixed deposit rates have been, I don't want to use the word languishing, but been staying as low as they have been, that's thought to have helped as well.
No, absolutely. I think there are a bunch of enablers, right? As in, of course, one is the market's doing well. 2 is fixed deposit rates going nowhere. 3 is, I think, real estate as an asset class isn't as aspirational or attractive in terms of ROI, as in the returns have plateaued over the last few years. So so almost stock market is like really the only option people have today to put their money in. And I think because of the pandemic, also people haven't spent as much money, right? So which means that they have more money with them to save, invest, because their spending has reduced significantly. So I think all of these put together and markets doing well is what is I think and generally this is the same phenomenon globally as well. And I have my friends who run large brokerage firms in the US, and they're seeing very similar behavior there as well.
Now, next week is going to be an important one as well, because you're going to see, the beginning of a new era, if you want to call it that, or at least a slew of IPOs that are going to hit the markets. These are very large brands. They're unicorns, but they're still loss-making. So they're going to have to train investors, maybe do what an Amazon did in 1997. But these kind of IPOs by a Zomato, by a Paytm, and later on Nykaa, Policy Bazaar, Delivery, what can they do for wealth creation and the equity markets and, like we're discussing, financialization of asset classes?
Yeah, no, I think the big challenge in India, especially, from the time we started Zerodha from 2010 has been that, you didn't really have brands that, like the millennials or, aspire to own, right? As in one of the reasons why the markets have expanded so fast in the US over the last 4 or 5 years is because of the FANGs, your Facebook, Apple, and like those brands that you aspire to own. And with the younger population, understands, uses, consumes the product. In India, we unfortunately, maybe like when I sit and think about maybe Royal Enfield is something millennials would probably relate to as a brand that they would probably aspire to own. But apart from that, so it's there haven't been many. So I think it's very exciting in terms of having all of these new age businesses listing. So it'll definitely help expand the market in terms of participation, because I think younger, more folks will come and want to be owning shares in these companies. In terms of wealth creation, I mean, I'm still not sure, because I mean, they are fairly valued, and the thing is, one of the concerns I have with a lot of these new age startups, especially in India listing, is, for a lot of startups, including us, for example, right, our edge on competition is really how nimble or agile we are as a business, right? And by listing, you potentially can lose some of the agility. Right. And that's really the only concern. I mean, in terms of valuing these businesses based on growth and not really the traditional metrics of price to earnings, I think Indian consumer will, the Indian investor will get used to it, because a lot of companies in the US have not been making money, and they've still gone ahead and created a lot of value and wealth for, investors. Like the concern here though is, it's India, and will CEOs, founders of these companies take as much risk as they did in the past after listing or not, is a question to ask. Because to achieve the kind of growth that they have been, you have to kind of take a decent amount of risk. So you can't shy away from taking risk. So that's really the only concern I have with this.
Clearly, interesting times ahead. Nithin Kamath, it's always a pleasure talking to you. Thanks so much for joining us this Friday live right here on ET Now.
Thanks.